Gerard, just broadly speaking, what are you expecting in terms of trading and net interest margins and loan growth from the banks? How are they going to look?
I think what you're going to see, Sarah, is that on the trading front, the numbers are not going to be very good. The managements have all given guidance in December, pointing out that trading revenues are going to be down year over year, and that doesn't even include the late December volatility. So I think what we should expect is on the capital markets trading front, you're going to see numbers that are not very positive. However, to your point about loans, fourth quarter, we saw a real pickup in loan growth for the banking industry, partly due to the fact that the capital markets area was not very conducive to raising capital. You might recall that in the month of December, where there wasn't a single high-yield debt issue that was completed, and therefore there was a re-intermediation back into the banks. Commercial loan growth should be very strong when they announce those numbers next week. And on the margin, we see flat to slightly up margins, so that should be okay as well.
So, Gerard, given all of that, do you think that the money centers are attractively priced coming into this earnings season, and which names in particular?
I think we might be better off in the regionals because on the money centers, similar to the two investment banks, Morgan Stanley and Goldman Sachs, we just don't know how much the weakness in capital markets has been priced into their stocks. And we'll find out on Monday, of course. That's when Citigroup announces their numbers. And if the numbers aren't as bad as expected, obviously the stocks will rally. You don't have that risk in the regionals. BB&T is a good example. It's been real weak this week. This is a strong regional name out of North Carolina. Should have good commercial loan growth. Same thing with KeyCorp and PNC. But within the money centers, if you wanted to stick there, I would say Bank of America and Citi are the names to own going into next week.
Gerard, I kind of can guess maybe where you're at on this, but I'm curious where you think big institutions are positioned with regard to these stocks right now. A year ago, it seemed like it was the consensus choice for an outperformer. Been disappointing. They've underperformed. Would people be pleasantly surprised and have to kind of rush to own these stocks if the numbers were good?
I think you're onto something. I just came back from a week in Toronto visiting institutional investors. Clearly, there's a little bit of caution up there about the American banks. I think many investors are on the sidelines. I think Wilfred put his thumb on it when he gave you that relative PE a moment ago. This time last year, we were at 80% of the S&P. Now, on average, we're down at below 70. They're priced very attractively. People obviously got burned late in the year, and they're a little hesitant to jump in. But if history's any guide, if the Federal Reserve is finished raising rates this year, that's very positive for the banks at this point in the cycle. And in years past, when they have stopped raising rates, in the 95-96 tightening cycle, 99-00 and 04-06, the bank stocks were the place to be. And I think that would be the case this year as well.
Gerard, what's your rating on Goldman Sachs overall? And of course, this will be the first time we hear from David Solomon on an earnings call, something that Lloyd Blankfein never did. But it's pretty crucial to hear from him for various reasons. What do you want to hear him say specifically?
I think it's going to be an interesting call. Obviously, we're all going to want to know about the fundamentals of the business, not just for Goldman, but for the others. But unfortunately, as we all know, they have the issue with the Malaysian Sovereign Wealth Fund. And I know they're not going to be able to give us much detail on it because of the ongoing investigations. But people are looking for reassurances that it's not more widespread than this issue with the Sovereign Wealth Fund over in Malaysia. Hopefully, they will be able to give us some reassurances that it's not widespread, and that will, help the stock. But that, unfortunately, is a cloud that is overhanging the stock. There's not only, the Department of Justice investigations, but you have the bank regulators. Goldman is a bank holding company. The Federal Reserve and others are investigating, and we have to wait and see what's going to happen as a result of those investigations.